Hello. So, are you a renter in California, or you have not, or anybody in your house has not owned a home in the last 3 years? That you're going to want to stay tuned and watch this video. I'm Heather Jones with Heather Jones Homes and eXp Realty, and I am here with my good friend Tracy Schmidt from Nexa Mortgage. And
Hi.
we just wanted to touch on the talk of the week right now. I'm sure you've heard about it. It's the California Dream for All program. So Tracy, just take it
Yeah.
away.
Yeah, it's the big news that's out there. And so we wanted to make sure that we get some details out to the people that follow you, Heather, and that who you can help actually realize the dream of homeownership where it might not have been possible for them beforehand. So I'm going to go through some of the specifics. I don't want to give too many details because, if you're interested in it, you definitely want to get in touch with us. But just
Yeah,
a
it's all
couple of
case by case.
Yeah, a couple of key points with it. So like what Heather said, you have to be like a renter, first-time home buyer, meaning you haven't owned a home in the last 3 years. And HFA has established a program where they'll give up to 20% of the sales price that could be used towards down payment and or closing costs. So you can kind of mix and match if you wanted to, depending on your situation. It is in the form of a silent second mortgage. So there are no monthly payments on that money that you're going to be borrowing from them. The key to it is it's a shared appreciation program. And do you want to explain, Heather, like kind of what that means a little bit in your opinion, shared appreciation?
So, in my opinion, year after year, when you own a home, your home is going to appreciate. Even if it's just 1%, half a percent, it's going to appreciate in value over time. So let's say you've lived in a house, you buy a house today and you live in it for 5 years, you could potentially appreciate around 5.9% is the average right now in the state of California per year. So I'm not a mathematician. We'll just use blanket numbers for now.
Yeah.
But let's say you appreciate $20,000 per year, then at the end of 5 years, you are sharing some of that equity with the state of California should you decide to move on and sell that property.
Exactly. Perfect. And that's really the key to it, is that people need to understand. So when you go to sell, you're going to be paying back that percentage that you borrowed. Now, you may not need the full 20%. You could take 10% of it, 5% of it. It's whatever is what's necessary to get you into the house. So let's say you took the full 20%, you'd pay the 20% back. And then depending on how you qualified, you would either pay 15% appreciation when you go to sell of what the home's appreciated over time, or 20%. So if you think about it though, on 100 grand, 20% is only $20,000 of that money, right?
Yeah.
So you end up gaining that appreciation of the other $80,000 that you wouldn't have had otherwise because you couldn't maybe have afforded to get into a home. So it's a great program. It's actually a conventional first mortgage, which a lot of people, think about down payment assistance as more like a government loan or an FHA loan. So the key is if you take the 20% and use it all towards your down payment, because it's a conventional loan, there's no what?
No private mortgage insurance.
No PMI. So that's what's helping people get a lower monthly payment and have more affordability. Now, if you needed 5% of that money to go towards your closing costs, right? There's a cost to do the program. Then we could do 15% down, which is a smaller PMI payment, and use the 5% to offset the closing costs. So again, it's going to be unique to everybody's situation.
Absolutely.
And on conventional financing, it's interesting because usually it's a 620 credit score that gets you into a home, right? But when you're getting assistance like this, they need to make sure that you have the ability to repay. And they're going to use your credit score and your credit history to really guide them in that qualification. So there are income limits per county. So in Riverside County, I shared it with Heather, it's about $172,000 total that your household could not go over, right? As far as total household monthly income. If you meet a certain percentage of that, where you're low to moderate income, you would need a 660 credit score to start looking into this particular product. If you're on the higher income side of that bracket, a 680 credit score is what you're going to need. So I don't want people either, though, to freak out about the credit score, because we've talked about this. We could do a soft credit pull and figure out where your score is. It won't affect your credit score. And if you're close to it, see how we can get you there. Or if you're there, then start the hard pull and the full pre-approval process to get you in. So that's really the sum of it. I want to urge people because, you know, like we talked about, Heather, there's only $300 million. I know to us that sounds like a lot of money.
Sounds like a lot, but in the entire state of California. So this is definitely, you know, one more tool in our toolbox that we can help people like you who want to buy and who just have some limited funds to be able to put down. So let's see if this program will work for you in the near future. And then, you know, if it doesn't, great, let's find another program for you. And if it does, then great, let's run with it. So
yeah, and honestly, the pre-approval process is the same. So you'd get in touch with Heather, she'd connect you with me. I'm licensed throughout the entire state of California. So if you're not in the Corona market with Heather, but somehow you see this video or you you know, reach out to her, we can help you. She could refer you to an agent that's outside of her market. It's the same pre-approval process. So you're going to do a quick application online, get me your income documents, get me your asset documents. I'm going to review credit, and then I'll be able to tell you that you do qualify for that program so we can get started and hold those funds for you so those don't go somewhere else, right? And you lose out if that money eventually becomes taken up. So I'm so glad you let me share this, you know, with everybody. It's the talk of the market right now, which they always come out with something when we need it, which I love. You know, it's good.
And I think that this is just great for particularly some of my buyers in my network. And if you're watching this video, like I said, Tracy and I are here to consult you and advise you on the best option for you to get into a home. So we're not here to pressure you in any way. We're just here to guide you along the process every step of the way. So thank you so much for watching. Thank you, Tracy. Appreciate you. And we'll see you next time.
You're welcome. All right. Awesome. Thanks, Heather.